Just in time for your weekly most comprehensive look at the world of business and economics. Welcome to another edition of Business Redefined. Now, the NHIF bill of 2021 has elicited a lot of reaction out here, and there is no person better positioned to help us comment on this than the man in charge of the NHIF itself, Dr. Peter Kamunyo. Welcome on set.
Thank you, Julian. It's a pleasure to be here on your show.
Great. Let's start with the fact that there was a report in 2018, if I'm not wrong, regarding the state of NHIF. And one of the issues which I picked from it was that NHIF, as presently structured, had a lot of viability questions in terms of the longevity within which it could continue providing coverage. Right. How far are we as far as that report is concerned?
Well, that report was came at a very opportune time in terms of the journey of NHIF. It was at a time that NHIF had actually first time made a loss. And indeed it was spectacular. What the HEFREP report, it actually had 55 recommendations. And these recommendations were geared towards two things: transforming NHIF to become a strategic purchaser of healthcare so that you don't go out of pocket, and also at the same time to be able to be the vehicle to deliver universal health coverage. So of the 55 to date, 21 are pending, yeah, and 34 have already been completed. And of the 21, some of them include the NHIF bill.
Mandatory contributions. A number of stakeholders have argued that as well-intentioned as it is, this could actually precipitate perverse outcomes. And why is that? Because one is that incomes are depressed, particularly in a COVID environment. Second is that insurance penetration in this country is low. Yes. And for many households, insurance is perceived as a luxury, much as it shouldn't be. Yes. So why compel everyone who's 18 and above to have mandatory remittances to NHIF?
The reason for that bill is to enable us to scale up to universal health coverage. What does universal health coverage mean? It means that everybody has access to the health care that they need without financial hardship. And for us to be able to get that, then it means that all the people who can pay should pay, and then those who cannot pay to be identified and supported. We're talking about a contribution of about 6,000 shillings a year, which is 500 shillings a month, 17 shillings a day per family of principal member, their spouse, and children up to as many as they are up to 18. So if you look at the average family size, it's about 3 to 4. So we're talking about a contribution of about 4 shillings per person per day. This is a very small amount compared to the benefit that the individuals would get and also the families. The number of members registered in NHIF as at end of the last quarter is 10.46 million. When we count their dependents in our system, it comes to a figure of about 24 million. But also at the end of last quarter, only 51% of them were active. And if you look at the voluntary contributors, even less. We're talking about close to 30%, as I mentioned. Now, therein lies the problem. It means that these are individuals who came in, paid for a few months, enjoyed the service of tens of thousands or hundreds of thousands, and then defaulted. So this is what is called adverse selection. And if this continues, then the system becomes unsustainable. And that is why in 2018, we actually had the first major loss because the benefits and contributors were not matching.
The counter-narrative to what you're saying is this. NHIF is deploying vast capital into biometrics, into an identification system. Why can't you just leverage it and ensure you identify, one, those who are coming into the system conveniently and vacating when it doesn't suit them, And then two, those who are actually desperately in need and cannot afford, as opposed to making it mandatory for everyone, including for those who might not desire to be on NHIF because they're on multiple other schemes.
Yeah. That's a good question. And it also brings us back to what the principles of insurance is. You might feel that you have no need today. But I will tell you, even the many phone calls that I get, that suddenly there's a phone call, oh, I need to go for hip replacement. I've not been paying for my NHIF. When will it become active? So we are getting somebody who didn't feel they needed. They waited until time of need, then wants to pay for 2 months so that they can get it and get the benefit. That is the adverse selection that we must cure. So everybody must be on board for us to be able to have the finances to support those who get sick. So leaving it still as a voluntary is experience that we have had. And we've had panel of experts who have reviewed that. We have had our actuaries actually look at that.
The proposal that employers should match their employees' remittances. The first reaction from stakeholders is that these guys want to crowd us out. Because if I'm an employer and I'm already matching my employees' contributions towards NHIF, why would I be putting them on a different scheme as a secondary pillar?
When we are talking about getting to universal health coverage, it means that everybody has this access without financial hardship. And the principles of social health insurance is pooling of resources. If you look at markets, because if you look at markets that have been able to achieve UHC or have social health insurance, employer matching is basic. And this is what aids in terms of ensuring that you have pooled resources to ensure that it be able to cover. And the other principle that is important is that with social health insurance is that those who are able to pay are able to support those others who cannot pay. And as you heard even from the HEFREP report, that the sustainability based on the enhanced benefits might be a challenge. So how do we cure that? We cure that by ensuring that we have pooled enough resources to be able to sustain. It is not accurate to say that it would crowd out. In fact, as we push towards universal health coverage where everybody is paying, there will be heightened awareness and knowledge of insurance and insurance principles. That's number one, because people are learning about issues of risk, that you pay a small premium and you get a huge number of benefits. That's number one. Number two, the way even our schemes are designed is to work in tandem with private insurers. Yeah? Even up to now, like the rebates, we still pay rebates even when somebody else is actually insured. So this helps to ensure the sustainability.
But Doc, skeptics to what you've said will tell you that is that the NHIF bill is less about medical insurance reforms at a social level and more about financial reforms. Because clearly, I mean, NHIF needs to find a way of ramping up the amount of capital that comes in for it to dispense its services. And first, you're telling us it's mandatory. Then two, you're telling us employers must match. Are you front-loading financial over the medical itself?
NHIF is not for profit. Absolutely not. NHIF, of the contributions that we get, 90% plus is paid out for reimbursement to hospitals for claims incurred. And that is what we want to sustain. We want to ensure that NHIF also remains financially stable so that when you and I, when Wanjiko and Fatuma, when Oduor out there need the service, it will be there. When a hospital in Migori has given service, we are able to pay their claims on time so that we are able to ensure sustainability. Because the journey we've been on for UHC is not something that we're switching on now. This is something that has been progressively increasing and progressively going on. So we are looking at a model that is sustaining, not a model to ramp up finances. And to have a model that is sustaining, it requires that we are able to pay the claims in time and having a little surplus to cushion catastrophic claims, which do happen. And when you speak to the private insurers, they will tell you that to know the financial strength of an insurance company, or what they call, is it a solvency ratio, whatever, you must have a certain level of funding available so as to cushion. And that is what was a problem in 2018, that had been eroded, and when we looked at that, it saw the reasons. So this raft of reforms are to ensure that Kenyans will have confidence and peace of mind that NHIF will always be there for them.
Correct me if I'm wrong in my reading of the NHIF bill. My interpretation is that it provides that NHIF will kick in only once the limits of the private or second pillar of insurance have been exhausted.
Right.
And of course, as you'd imagine, there's been a lot of concern around this. And personally, I take concern with it because for a scheme which should be riding on the universal coverage, you can't be kicking in at the tail end, you know.
I'll take you back to how we have evolved and to the days when we used to do rebate only, which is a reimbursement of bed days to a hospital depending on the level. And a lot of insurance companies then put in their policies that they would pay their hospital bills net of NHIF. But come 2015, when we introduced the packages, like the radiology package, the oncology packages, the surgical packages, that notion remained. The result of that is that, and because with the packages, we reimburse close to basically almost the commercial level, yeah? Not discounted, because like the MRIs, if it's about the dialysis, which is about 18,000 shillings a week, if it is the surgeries, we're talking about 50 to 30 to all the way to 450,000 shillings. So the resultant of that is that also the private insurers are now riding on NHIF. So NHIF right now is actually funding private insurance because we are taking that loss. Because remember that clause that was saying, first, that we pay net of NHIF. So this has also created a big strain, and it is not in the spirit of how it was designed. So in terms of taking first loss, because that's the way even the premiums for many of the insurers had been calculated, without taking into account that NHIF now is paying for MRIs, so not paying for it, paying for minor surgery, so they're not paying for it. The spirit is that, and what is contained in the Amendment Act, is that NHIF will still continue to pay for rebate, even when you have private insurance. But what we are talking about, we take now the second loss, is that if you do have private insurance, then if you're having your MRI or you're having your surgery, then that bit, that package fee, the private insurer pays for it. And if your limit is small or if it is exhausted, then our package fee comes in after that.
Regarding the issue of NHIF and private insurers and who kicks in at what point, are there models which have pointed out to you that once this act is passed as it should, as it is right now, then it will have this level of impact on your loss ratio as the fund?
If it is passed, it would, our projections is that would remain fairly stable. If it continues the way it is now, and also the numbers increase, then we might go into a situation of adverse loss ratio. So this measure right now is to contain to contain it, because the modeling that we've done, and including the number of people who will be able to access. Julian, you also mentioned it's only 2% of Kenyans who have private insurance. So the 2% compared to the more than 78% of Kenyans that we want on board to be able to benefit, it would not dent. But if it is continued, then it means this 2% of Kenyans would be able to consume so much more that it would be a challenge to the loss ratio going forward. And this is something that we've noted. Because even in the model right now, you would say that there's something fundamentally wrong, because with the cost of like MRIs, the many insurers who are not paying for MRIs right now, because NHIF kicks in. There are many that for most of the simple surgeries, simple to moderate surgeries, they're not paying because the NHIF rebate for, not rebate, package fee caters for it. So we've got to also cushion the fund from that adverse utilization to ensure sustainability.
Doc, a lot of the issues we've discussed thus far point to the fact that we are really hinging on this NHIF bill to pass as it is, for NHIF to be in a sustainable position for the long haul. Yes. Suppose, in totality or in part, parliamentarians shoot down some of these proposals. Let me give you an example. Yes. The one that contributions should be mandatory. Yes. What would that mean for NHIF, and what recourse would you have?
That's a great question. And we of course, by the time we did our actuarial analysis to see where the pain points are and where the real problems are and what needs to be fixed to come up with the mandatory contributions, we had also explored, because we know the process of amendment is long. We know that process is long, and we're not going to sit pretty waiting for that to happen. So we also explored what are some of the reasons, apart from overt fraud or overt perverse incentives of not joining or misusing the fund, what are the other reasons that lead to members not renewing, members not regularly contributing? Some of them is as simple, Julian, as forgetting. Yeah, it is not a priority. Right now, I'm not feeling that ache or pain, or auntie so-and-so has not called me, so I forget to pay for her, I forget to pay for myself. So there's that issue of forgetting. There's also the issue of, is a payment mode easy? Do I have to go somewhere to the bank, get a slip, or M-Pesa today, or other mobile payment mechanisms not working, etc.? So what we have done in part of the reforms and the digital transformation is starting to make it easy to be able to pay. And one of the campaigns we're doing right now is to encourage all our members to have their mobile numbers registered by NHIF. So even this exercise we're doing for biometric registration, we are also capturing the mobile numbers of our members. This helps in many ways. Number one, not only reminding you about your payments, but it also helps that when your card is used, when your membership is used, you actually get an alert. It also becomes an easy way of us to communicate with you. And so that is one way. So we are making it easy for reminders. We are making it easy for payment. Making it easy for payment is we're in conversations with some of the telcos to include NHIF in their menus for mobile payment.
The World Bank last week extended an 80 billion shillings loan to Kenya, and NHIF was part of the subject of the reforms. And let me read for you what the World Bank says. That fourth, there should be improving of the governance of the National Hospital Insurance Fund, and this is expected to help reduce waste and misdirected spending, which has affected the scheme. How do you respond to that?
We also have to thank World Bank for the support that they've been providing. One of the key reform areas was organizational transformation. As I described to you, NHIF has evolved from a very basic reimbursement or rebate of per day to a sophisticated insurance model with different payment mechanisms, with managing different benefits, and having stakeholders across. So with that evolution also requires that the human resource element, the organizational structure is aligned to be able to do that. And World Bank have been supportive in that process. We are actually in the middle of the organizational transformation to ensure that our organizational structure is aligned to the elements of, that we are dealing with, to ensure that staff are also aligned based on their skills and the outcomes that we seek. So, and World Bank has actually supported that and have committed to continue supporting that.
But Doc, the World Bank speaks of misdirected spending, and I think here the context is around medical fraud and the fact that NHIF perhaps is not stepping up to the measure of events in terms of the prevalence, I should say, of medical fraud out there.
No, indeed. And actually, even in our current restructuring, we've actually created a division that deals specifically with medical fraud. We are stepping up not only our internal structures, including that division that is dealing with compliance and enforcement, that's the name, including collaboration with other law enforcement officers. We've already been in touch with the Directorate of Criminal Investigation, and we're going to be in collaboration also with the EACC and also with the Office of DPP, so that we can be able to take it to prosecution. It might be good also for you to note that within the last 2-3 months, we've already been able to get about 19 healthcare providers who have been involved in one form or the other of medical fraud. And these cases have been presented to the courts and awaiting next steps, even prosecution. It involves the patients, because when we have impersonation, when you give your card to your friend, to your neighbor, to your sister, that impersonation is fraud, is stealing, and that is very, very rampant. That's, I think, almost the largest. At provider level, there is also accepting that. There is claiming what we call upcoding, whereby it was minor surgery, which we reimburse 30, 50,000, but you put a claim of major surgery where we reimburse 150,000, or even at worst levels where they actually sit down and manufacture claims.
Well, that point by Dr. Peter Kamunyo takes us to the close of our conversation, where we've been looking at NHIF and the NHIF bill. Up next is the Markets Report.